This is the secret that they don't tell you about building credit, and this is how I went from $0 of available credit at 18 to 100,000 plus available credit at the age of 22 with an Amex Gold card and many other premium cards that give me free towing, free groceries, free movies, free travel, free lounge access. These are all the perks that come with having a high credit score and being a trustworthy borrower. Because why? It's very profitable for the bank to lend money, so they really want to incentivize it. However, if you are very responsible with your resources, you can have all of the perks of the credit cards and none of the downsides. So if that's interesting to you, let's get started. So basically, you want to start with the basics, and the basics are this: what constitutes your credit score? There are many things that constitute your credit score, but there are three main things. Number one is payment history. Number two is credit utilization. And number three is hard checks. Now, I don't think there's really an order in which these are ranked. I think they're all ranked as what are called high impact factors. So we're going to talk about payment history first. And payment history is the easiest one to manage. Never pay your credit card late, ever. Not even one time. Don't even think about it. Don't even think about skipping a payment. Don't even think about making a minimum payment. The way you win with credit is by managing your finances responsibly. You pay your credit card off to zero at the end of every month, or you pay your credit card off to zero more often than that. There is no option otherwise. If you cannot pay your credit card down to zero, you should not have a credit card, because the bank will use that tool to destroy your life and enslave you with interest. As soon as you let a balance roll over on your credit card, now you are enslaved to the bank, because now they have attached interest to your balance, and that interest will accrue interest, and the interest accrues interest, and it compounds infinitely, and you will become a wage slave. If there's anything you take away from this video, above everything else, it has to be: never let your credit cards carry a balance under any circumstances, no matter what, unless there is a specific promotion that gives you a promoted balance or promoted interest rate. And we'll get into that in a little bit later. But anyway, that's payment history. Never pay your credit card late. Pay on time, in full. Never even pay half of the card. You have to pay it to zero all the time, every time. You cannot mess that up. That is the number one rule. And if you screw that up, basically you are just signing yourself up for a life of hell financially. Number two, we're looking at hard credit checks. Now, what a hard credit check is, I'm going to simplify it a little bit, but basically it's when a financial institution requests your credit history from the credit bureau. And the reason this affects your credit negatively is because what they're assuming is the more credit you are applying for, the more desperate you are for financial flexibility, the more desperate you are for loans because you don't have money. That's their thought, right? They're not thinking about business, which is the way that we're going to approach it. They're not thinking about business. They're thinking about consumatory spending on borrowing, which is what average consumers do, which is not what we're going to do. We're going to do using our credit to allow us to leverage ourselves and make a profit in our business. That is the name of the game. However, from the bank's perspective, if they see a random dude apply for 5 credit cards in 2 months, that's a huge red flag. Why does this guy need 5 credit cards in 2 months? Is he broke? That's the way that the bank is going to see it. They don't really care about the nuance. They care that more applications equals more risk for them. So they want you to stay away from that. So the way that we're going to counteract this is what we're going to do is we're only ever going to apply for 1 card per financial institution that we want to be a part of. So let's say, for example, right, we have our main bank. The main bank is going to be a little bit chiller with you because they can see your money, right? So it's not going to be as big of a deal. And a lot of the times you might even get a promo deal where you become pre-approved for a credit card without even doing anything. However, let's assume that doesn't happen. What you have to do is basically every single bank has what's called a secured card. And the secured card is very simple. It's just a card that has a deposit, and you can only borrow the amount that you deposit. And all that does is just give the bank a guarantee on the loan, so then that way they don't have to risk anything. and then that's a guaranteed way to get a card. Once you have your secured card, you put down 500 or 1,000 or whatever you want for the limit of the card. That's when you're gonna have your first and hopefully your last for the year credit check, because until you get an offer from the bank for the next card, you shouldn't be applying for any cards, because the bank knows when you're ready, because they're monitoring your credit automatically with what's called a soft check. And what a soft check is basically they just ask the credit bureau for the most recent credit score, and that's what they use for, Clear Score or Credit Karma. The credit bureau updates your credit every month. So the thing is, though, the actual financial institutions, when you're applying for a card, they request a up-to-date, to the day credit report, which is what is a hard check. And the reason they do that is because, let's say, for example, you've gone on a spree from the first of the month till now applying for credit cards. That wouldn't show up on a soft check, but it would show up on a hard check. So that's the thing, right? The soft check is on a month-to-month basis when your credit card statement prints. However, your hard check is to the day when the check is requested. So once you do the first hard check to get your secured card, you need not do another hard check for another year or two, because once you start spending money on that card and use that card for everything and paying it down to zero, like we mentioned, and even sometimes what I would recommend, you basically want to try and max out the card every month to show the bank that you're capable of holding balances and paying them off on time with no issues. And once you show the bank that for maybe 2 or 3 or 4 months, they will give you a credit card that is unsecured. Now your mission is to use your unsecured card as much as possible to show the bank you can spend a lot of money. Again, back to the original thing, do not spend more money than you have, no matter what. However, if you are going to spend money anyway, spend it on your credit card. Give them evidence you can spend 4,000, 3,000, 5,000 in a month, so that way they increase your limit. And once you get your limit up, and this will happen naturally if you're maxing out the card and paying it off to zero. Maxing out the card, pay it off to zero. You want to show the bank that you can spend money responsibly and pay it off. So that means buying everything. Do not use a debit card, because this will show the bank you are responsible with your credit. They will slowly increase. It'll probably go from 1,000 to 1,500. 1,500, they might give you 3,500. Then they might give you 5,500. Then they might give you 7,000. Once you get up to like the 7,000-ish range, that's when your credit is in good enough standing. You should try and go and look at other financial institutions that have premium cards that have good rewards and apply for those. Now, the thing is, once you start having multiple cards, we get into the third and final factor, which is credit utilization. And what that means is you're never going to have to worry about this, because this is handled by the first two. If you never hold a balance on your credit card, your credit utilization will always be zero, so you never have to worry about it. However, you want to, by all means, keep your credit utilization below 30% at any given moment, no matter what happens. Of your total, what percentage are you using? That's all that credit utilization is. And it's the easiest thing to understand, because if you think about it, if you're using 100% of your loans available, it's a little bit sketchy for the bank. So that's all you got to worry about with that. But basically, just keep your credit utilization. Don't use more than 30% of your credit at any given moment. And that doesn't mean day to day, that's month to month. So when your credit card statement prints, is there more than 30% of your available credit being used on that particular cycle of your state, right? Which, if you're making payments to zero, will always be no, because when you print the statement, the balance should always be zero because you're making a payment. So the next thing is to know is, okay, so you have your $7,000 credit card now after, grinding your card. This will take about 8 months, let's say 8 to 10 months, maybe a year. Then you want to start applying for premium rewards cards. So if that comes to, you want to get the American Express green card, you want to get that whatever card. However, you want to be careful not to apply to a card that you don't have good odds with, which is where you maybe want to download Credit Karma or you want to get a Clear Score. You want to look at these apps because they will give you promo offers directly correlated to your credit profile, which will give you odds of your approval, and they will recommend certain cards to you. So for example, for me, I applied for a card that was the PC Financial World Elite MasterCard, and that card said I had excellent approval ratings. And so when I went in and I put in my information, immediately right off rip, they gave me $7,500 to match my other card. So that is the power of having another card with a high-ish limit. What you want to maximize maximize is you want to maximize your credit card per check, right? So you only ever want to apply for a card that you know you can get. And the way that you increase your approval odds is 1, low credit utilization, and 2, you want to properly fill out the application. And the way you get really, really good results with these applications is you lie because they don't check. And it's fine because you only lie about your household income. Don't lie about your real income. Put down your actual whatever money you actually make every month, but your household income, just put down like 300,000. Because to be honest, most of the time, if you have a family with more than like 4 family members, you'll have 200,000-300,000 in annual household income. It's not that uncommon. If your dad makes 100,000, your mom makes 60, your brother makes 30, you make 30, your sister makes 20. It's quite reasonable to just stretch it to 300. It's not, the bank is not going to look at that and say, oh, that looks a little bit high. It's a reasonable amount. And most cards will approve you if you put down 300,000 as your annual household income. And that's like a real perk, because once you get one premium card, the other premium cards will see, oh shoot, he has this card. Okay, well, if he was approved for this one, then so that worked for my Amex. I had an Amex card, and then that opened the door. I had an Amex Green card. I grinded my Amex Green card for 8 months. Then they gave me an upgrade to Gold, auto approved. Didn't have to do a credit check. Now that I have the Gold card, every single credit card that I apply for, I am auto approved, and they give me a lot of money. That's where you get those perks of having good credit, is after 2 or 3 years of grinding your cards, then you start getting into big rewards cards that give you really crazy stuff, because they see, okay, this guy, he spends a lot of money, so let's give him a lot, let's give him way more money, and then see, okay, maybe he'll spend too much, and then we get him on the interest. That's the idea, right? That's their whole idea, is let's get him on the interest. So that's basically the step-by-step principles that I used to go from no credit to 100,000 plus in available credit. And it's really simple, dude. Never let a balance roll over. Never go late. Don't do too many unnecessary checks. Wait for the bank to offer you balance increases. And then once you have a good balance on one card, then start applying for one card every 8 to 10 months. And once you do that, you grind these cards. Once you have 2 or 3 cards, you can even pit the cards against each other. You use one card all the time, and then you get another card, then you start using that card all the time. That will freak out one of the banks to say, oh no, he's not using our card anymore. We gotta give him a more advanced offer. So I had a TD card. I had a TD Aeroplan Visa. I used that card. Boom, boom, boom. I was using it, probably spending $3-4 grand a month on that. Then I got my American Express. I started spending $5-6 grand a month on my American Express, and TD started panicking and said, oh no, he's not using our card anymore. They offered me free upgrades. They offered me 0% balance transfers, etc. This is where you really start to see crazy stuff when the banks start competing with each other for your business. And that comes from going back and forth between this card, using this card, this card, this card. And then, you just stop using the card altogether, not for very long, like maybe 3-4 months. And then you'll notice the bank will be like, hey, please come back, please. Then what you can do is you can get a card like the MBNA Trueline MasterCard, which is a 0% balance transfer card with 7% interest regularly, or I think it's 12.99 actually. 12.99% interest regularly, but you can take out a 0% loan for 6 months every single 6 months. That gives you so much flexibility to do stuff like investments or floating cash flow, and that was what helped me get through the last couple years when I was going to school, I didn't have an income, whatever. I was able to float myself my tuition, floated my taxes, all this stuff, was able to push that can down the road and refinance my debt at 2% every year. And that sounds like it's bad, but that was really only, I paid $1,000 to service a total of like $60,000 of debt, which is basically free, you know what I mean? So these are really great offers once you learn how to play the game. Once you get a good credit report, once you get a good history of paying off your credit cards and doing really good clean hygiene with your credit, once they see you taking out $10,000 on a credit card balance transfer and then paying it back 2 months early in full, that does so much for you that you start throwing money at you, because they want you to lose. And if you don't lose, they have to keep upping the ante until you do, because their game is this: give them more money until they can't pay it back, because we want them to be irresponsible. You can play that game by being so responsible that they never get you lacking. Ladies and gentlemen, thank you so much. Have a wonderful day. Consider subscribing if you liked the video. We're gonna make a couple more videos like this, and put a comment down below of what other kind of stuff you guys want to hear. So thank you so much, and you guys enjoy the rest of your day.